While you were sleeping, a financial decoupling just occurred that the Western world is desperate to hide. China just bought silver at $34.80. The screen price, $28.50. The gap between reality and the lie is now $6 wide. That is not noise. That is not volatility. That is a fracture in the global pricing system. When the second largest economy on Earth is willing to pay 22% more for metal than the West says it is worth, the paper market is losing control. And what happened next is even worse. Because buried inside the banking plumbing this morning was a confession. Let's look at the financial crime scene. This morning, the Federal Reserve just quietly funneled $17 billion to banks that are bleeding out. This isn't a loan, it's a blood transfusion for a dying system. Healthy banks don't leave a trail of desperation leading straight to the Fed's emergency window. When a major bullion bank runs to the central bank for emergency oxygen, it means private liquidity has dried up. That is the smoking gun. That is the confession. That is the evidence. And if you can see the crime, hit the like button. Let's make the algorithm show this truth to the world. Now connect the dots. China pays a massive premium for physical silver. The spot price collapses anyway, and suddenly banks need $17 billion in emergency liquidity. That is not coincidence. That is a margin call, wearing a disguise. Here's the math. One futures contract controls 5,000 ounces. A major bullion desk short 10,000 contracts controls 50 million ounces. For every single tick upward, a $50 million hole is blown into the balance sheets of the too big to fail banks. Silver didn't just tick up, it exploded $5. That is a $250 million cardiac arrest before the markets even opened. And that is just one bank. Now multiply that across the global bullion complex. You are no longer talking about losses. You are talking about systemic trauma. The clearinghouse does not care about narratives. It wants cash. And when the system asked for cash, they didn't have enough. So they ran to the Fed, not for expansion, for survival. China paid more. Silver spot crashed. Banks needed $17 billion. That is not a market. That is a cover-up collapsing in real time. But here's the part nobody understands. The Fed can solve a cash problem. It cannot solve a metal problem. The Federal Reserve can manifest $17 billion with a keystroke, but they cannot manifest a single atom of element 47. You can print the price, but you cannot print the metal. And physics just issued a margin call that the printing press cannot answer. That Shanghai premium is not just a number, it is a signal that physical buyers no longer trust the Western quote. It tells you the real market is migrating east, and once physical buyers stop respecting the paper screen, suppression becomes impossible, because banks can sell paper forever, until someone asks for the bar. Then inventory decides. Now let's talk geopolitics. China isn't just buying silver, they are executing a physical vacuum. They have turned the Shanghai exchange into a black hole that is sucking every physical ounce out of Western vaults. New York is running on fumes, Beijing is holding the keys, and here's the logic trap the banks are stuck in. Every paper smash by Western banks is essentially a subsidized discount for China. Wall Street is literally paying for Asia to take their silver away. It's the greatest wealth transfer in commodity history, and the banks are funding it themselves. Let that sink in. They suppress the paper price. China buys the physical discount, vaults drain faster, margin stress grows. That is not defense, that is self-inflicted collapse. Wall Street is paying China to take their silver. That is not strategy, that is surrender. Now the trap becomes mathematical. If silver rises, banks lose more. If banks lose more, the Fed prints more. If the Fed prints more, the dollar weakens. If the dollar weakens, silver rises faster. They are trying to put out a fire with cash. But cash is flammable. The financial system has become cannibalistic, consuming its own future just to survive the next 24 hours. And this is your vindication moment. They mocked the stackers. They mocked the miners. They mocked anyone who said paper silver was synthetic. But you held the line. Now the banks are the ones begging for oxygen. You were right. But it gets even worse. Because once a pricing fracture opens like this, confidence begins to die. And confidence is the real currency. The moment people realize the screen price is not the street price, paper credibility collapses. We are moving from a market of how much does it cost, to a market of who actually has it. In the era of unobtainium, price is irrelevant if inventory is zero. The era of fake silver is over. The era of unobtainium has begun. So what happens next? Here is your 72-hour roadmap. First, watch the Shanghai premium. If China keeps paying $5, $6, $7 over spot, the drain continues. Second, expect volatility. The banks just received emergency liquidity. A wounded system still lashes out. Third, watch for the delivery default headlines. When more buyers demand bars than the vaults actually hold, the paper market enters the death zone. That's when the price doesn't just rise, it gaps up into another dimension. Fourth, prepare for the buy button risk. There comes a phase where the question stops being what is the price and becomes can you even get it? The most dangerous phase of a silver bull market is not when price is high. It is when the metal disappears. The screen says $28.50. China says $34.80. One of them is lying. And the one with empty vaults is not the one you should trust. Let's close this clearly. China paid more while spot crashed. That exposed a $6 fracture between paper fiction and physical reality. The banks responded by sprinting to the Fed for $17 billion in emergency oxygen. That tells you everything. The suppression machine can still delay, it can still distort, but it can no longer command reality. Paper can stall, physical decides. This is JonFunds egg. We track the truth, not the ticker. And in the next video, I'm breaking down the one event that could detonate this entire structure overnight, the first major COMEX delivery failure. The day a buyer asks for silver and gets cash instead. That is the day paper dies. And that day may be closer than anyone thinks.